Will Nvidia's earnings save the stock market? Nvidia is responsible for over 80% of the AI chip market, making it one of the most influential companies in the world today. Over the past year, the stock has surged by over 200%, significantly outperforming the broader market and fueling much of the S&P 500's growth. Now, as Nvidia prepares to release its latest earnings report, investors are watching closely. The big question is, will this earnings report reinforce Nvidia's dominance and propel the stock market higher, or will a disappointing result lead to a massive tech sell-off? The stakes are extremely high. Nvidia's earnings are projected to triple year over year, an expectation that very few companies could realistically sustain. Even if the company meets expectations, it may not be enough to maintain its current momentum. Historically, when expectations are sky-high, any slight miss can trigger a significant market reaction. Nvidia is now the fourth largest company in the US by market cap, meaning that any volatility in its stock price can have ripple effects across the entire market. A strong earnings report could push tech stocks and AI-related companies even higher, while a miss could lead to a sharp downturn in the broader indexes. Why Nvidia's earnings matter? More than ever, Nvidia is not just a leading semiconductor company. It is the backbone of the modern AI revolution. Its GPUs power applications in machine learning, cloud computing, gaming, autonomous vehicles, and data centers, making it one of the most influential companies in today's digital economy. Over the last few quarters, Nvidia's stock has skyrocketed as investors bet on the continued expansion of AI technology. The company has already established itself as the undisputed leader in AI chip production, with competitors like AMD and Intel struggling to keep up. However, as the market becomes increasingly dependent on AI, investors are beginning to ask, can Nvidia continue this level of growth, or is the stock overvalued? A key factor in Nvidia's dominance is its data center business, which now accounts for nearly 80% of total revenue. This segment has experienced explosive growth due to increasing demand for AI-driven applications. Companies like Microsoft, Amazon, and Google rely on Nvidia's GPUs for their AI infrastructure. And as cloud computing expands, Nvidia's revenue has surged. However, there are warning signs that AI spending may be slowing down. Recently, Microsoft canceled several data center leases, signaling a potential pullback in AI investments. If this trend continues, it could have major implications for Nvidia's future growth. Another major risk is supply chain constraints. Reports suggest that Nvidia's highly anticipated Blackwell GPUs may be experiencing production delays, which could impact revenue growth over the next few quarters. Investors will be closely watching Nvidia's earnings guidance to see if the company addresses these concerns. If Nvidia confirms delays or provides weaker than expected forward guidance, it could trigger a significant market reaction. Breaking down Nvidia's earnings expectations, Wall Street analysts have set very aggressive targets for Nvidia's earnings, with revenue expected to grow by an astonishing 242% year over year. The company's earnings per share, EPS, is projected at $5.57, a dramatic increase from $0.88 in the same quarter last year. These are some of the highest expectations ever placed on a tech company, which means that even a minor deviation from these numbers could lead to volatility. One key aspect of this earnings report is forward guidance. While Nvidia's past performance has been strong, investors are more concerned about future demand and potential revenue growth. And if Nvidia provides a weaker than expected outlook, it could indicate that the AI boom is slowing down. On the other hand, if guidance remains strong, it could reinforce confidence in the AI sector and push the stock even higher. Market scenarios based on Nvidia's earnings report. There are three potential outcomes based on Nvidia's earnings report, each with its own market impact. First, in the bullish scenario, Nvidia exceeds expectations with stronger than expected revenue and EPS, while also providing positive forward guidance. If this happens, AI-related stocks like Microsoft, AMD, Google, and Palantir could rally alongside Nvidia. The Nasdaq and S&P 500 would likely see an upward surge, reinforcing the AI-driven bull market. This outcome would validate the belief that AI spending is still accelerating, leading to more investor confidence in the tech sector. In a neutral scenario, Nvidia meets expectations but does not significantly exceed them. In this case, the stock could see short-term volatility as investors take profits. A sell-the-news reaction is possible, especially considering Nvidia's rapid stock price increase over the past year. This scenario would likely result in minor fluctuations in the broader market, but no major trend reversal. The worst-case scenario is if Nvidia misses expectations or provides weak guidance. If this happens, it could trigger a broad sell-off in the tech sector. Companies that rely on Nvidia's chips, such as Microsoft, Google, and AMD, could see their stock prices drop sharply. AI-related stocks, which have been among the best-performing assets over the past year, could experience significant declines. Investors may also start questioning whether Nvidia's valuation is justified, leading to increased uncertainty in the market. Key risks to watch in Nvidia's earnings. While Nvidia has been a major growth driver in the stock market, there are several risks that investors should be aware of. One of the biggest concerns is slowing AI spending. If companies begin cutting back on AI infrastructure investments, it could reduce demand for Nvidia's chips. Another key risk is supply chain constraints. Delays in Nvidia's next-generation GPUs could impact future revenue growth, leading to a possible slowdown in sales. Valuation is another significant concern. Nvidia currently trades at a price-to-earnings (PE) ratio of over 80, which is extremely high by historical standards. If growth starts to slow down, investors may start questioning whether the stock is overpriced, leading to potential declines. How Nvidia's earnings will impact the stock market. The broader market reaction to Nvidia's earnings will depend on the strength of the report. If Nvidia beats expectations, AI stocks and growth stocks could see continued upside with renewed confidence in the sector. The Nasdaq and S&P 500 could move higher, reinforcing the bullish trend in technology stocks. However, if Nvidia disappoints, it could lead to significant volatility in the market, particularly in tech-heavy indices. A major miss could trigger a broader market sell-off, leading to increased uncertainty and defensive sector rotation. Final thoughts. What should investors expect? Given the extremely high expectations surrounding Nvidia's earnings, investors should be prepared for a high volatility event. If Nvidia delivers another blowout quarter, the AI-driven market rally could continue. However, if results disappoint, a sharp correction in tech stocks is highly likely. Investors should be aware of potential risks and avoid taking excessive positions ahead of earnings. Regardless of the outcome, Nvidia's report will be a defining moment for AI stocks and could set the tone for the broader market in the coming months. Investors should pay close attention to forward guidance and AI spending trends, as these will be key indicators of where the sector is headed next. What do you think? Will Nvidia's earnings drive the market higher, or are we due for a major tech correction? Comment below with your thoughts. If you found this breakdown valuable, hit the like button and subscribe for more real-time market analysis.